Imagine waking up one morning to a world where the US dollar is no longer the dominant global currency. Oil isn't priced in dollars, international trade doesn't require Washington's approval, and the balance of power has shifted eastward. That scenario may not be decades away. In fact, it's already starting, with India officially joining the BRICS payment system, a move that could reshape the global financial order. Today, we'll uncover why India took this step, how it challenges the United States, and whether this is the beginning of the end for the dollar's supremacy. Stay with me, because this story is much bigger than you think. For nearly 80 years, the US dollar has been the backbone of global trade. After World War II, the Bretton Woods system made the dollar the world's reserve currency, and oil exports from the Middle East cemented its dominance. But that dominance has created tension. Countries like Russia, China, and even US allies have long complained that Washington uses the dollar as a weapon, imposing sanctions, blocking payments, and controlling global finance. Enter BRICS: Brazil, Russia, India, China, and South Africa. Together, these countries account for over 40% of the world's population and more than 30% of global GDP. And now, BRICS is building its own cross-border payment system, independent of the dollar. India has historically balanced between East and West. On one hand, it trades heavily with the US and Europe. On the other, it imports massive amounts of oil from Russia and has growing ties with China. But recently, US tariffs and threats of secondary sanctions have pressured India. Washington has criticized New Delhi for buying discounted Russian oil and trading outside the SWIFT dollar network. So India faced a choice: remain fully dependent on the dollar and risk being squeezed by US policies, or hedge its bets by joining BRICS' alternative system. The decision: India is now officially testing and integrating transactions through the BRICS Pay system. This allows trade in local currencies, bypassing the dollar altogether. So what exactly is BRICS Pay? Think of it as a global alternative to SWIFT. Instead of routing payments through US banks, BRICS Pay directly connects member countries' financial institutions. Transactions can be settled in local currencies: Indian rupees, Chinese yuan, Russian rubles, or a proposed BRICS digital currency. This means if India wants to buy oil from Russia, it can simply pay in rupees or in a shared digital BRICS token. No dollars required, no US oversight. It's fast, it's cheaper, and most importantly, it's immune to American sanctions. Now here's the billion-dollar question. Does this mean the dollar is finished? Not so fast. The dollar still dominates about 60% of global reserves and over 80% of trade settlements. But make no mistake, cracks are forming. With India on board, BRICS is no longer a fringe experiment. It's now a credible alternative for nearly half the world's population. If more countries, like Saudi Arabia, Turkey, or Indonesia, join BRICS and adopt its payment system, the dollar's dominance could shrink dramatically. And remember, the dollar's supremacy gives the US enormous geopolitical power. If countries can bypass it, America's leverage weakens. India isn't turning its back on the West, not yet. New Delhi still needs US technology, defense cooperation, and access to Western markets. But by embracing BRICS Pay, India sends a clear message: we will not be bullied by tariffs or sanctions. We have options. This is classic Indian diplomacy: multi-alignment. Partner with the US when it suits national interest, and pivot to BRICS when Washington becomes too aggressive. In short, India is hedging its bets, preparing for a multipolar financial world. This shift doesn't just affect India and the US, it has massive global consequences. For China, BRICS Pay expands the reach of the yuan. For Russia, it provides lifelines against Western sanctions. For smaller nations, it offers freedom from dollar dependency. For global companies, it complicates supply chains, as they now need to operate in multiple currencies. Some analysts even predict the rise of currency blocks, the dollar zone, the BRICS zone, and perhaps an EU-led Eurozone. This fragmentation could reshape everything from oil pricing to stock markets. Of course, BRICS Pay isn't guaranteed success. Can India and China, rivals in many areas, truly cooperate? Will Western banks retaliate by cutting off nations that use BRICS Pay? And most importantly, will other countries trust the system enough to invest reserves in it? These are unanswered questions, but the momentum is undeniable. So here is the bottom line. India's entry into the BRICS payment system marks a historic shift in global finance. It doesn't kill the dollar overnight, but it plants the seeds of a new, multipolar monetary order. For the first time in generations, the United States faces a serious challenge to its financial dominance. And India, once considered a silent player, is now at the heart of this transformation. The real question isn't whether the dollar will decline, it's how fast. So I'll leave you with this. When future historians look back at the decline of US dollar supremacy, they may point to this very moment when India joined BRICS Pay and signaled to the world that the financial future will not be written in Washington alone.